Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the January 24th, 2024 edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, produced by Paige Driscoll with the help of the EverAg Insights team. We are finally thawing out here in the upper Midwest. What better way to celebrate than the latest from the NDPSR report? Let's start with butter. This butter number coming in at 261.56 is a plus 5.5 to the CME 1 week average of 255.95. So the CME moved 9 lower, NDPSR only down 3. That gives us that 5.5 cent positive basis, and that's with 33 lows traded on the CME last week. So in butter, higher than normal basis, and look at this volume. Approaching 4.6 million pounds, so almost 1 million pounds over. So the weakness at the CME did not translate to the NDPSR. Manufacturer held out for higher prices, and on those higher prices, they were able to move above expected volume. So certainly a win for the manufacturer this week in butter. In cheese, the blocks came in at 152.35. That represents a plus 7 to the CME 1 week average of 145.63. Plus 7, of course, well above our expected 2 to 4 cent positive basis. We were able to achieve that higher basis with 21 loads trading at the CME. Those 21 loads, however, don't really show up here on the NDPSR. NDPSR volume, a little bit of a disappointment, falling just short of the 11.4 million pound mark and about 1 million pounds under the expected 12.5 million. So the manufacturer was able to call a really nice price, plus 7, and the ability of the blocks to hang out north of this 150 level yet again, certainly impressive, but that higher price came as a cost as end users turn their nose up a little bit and volume is lackluster at best. In the barrels, 149.14. That's a plus 5 to the CME 2 week average of 144 even. So plus 5 right in the middle of our expected 4 to 6 cent positive basis. Story seems to be similar in the barrels as it is in blocks. Even with 16 lows traded on the CME last week, volume here still falling short of 12 million. So blocks were about 1 million under the expected volume. Barrels about 1.5 million under. So the manufacturer is holding out for positive basis, but sales are suffering. Both block and barrel sales underwhelming. And what's interesting, on the CME weekly average, we had a blocks average of 145.63 and a barrel average of 144. So blocks came in 1.5 pennies over on the CME weekly averages. But because the block basis was 2 cents higher than the barrel basis here on the NDPSR, we're right at a 3 cent block barrel spread. So interesting that even with the tightened spread that we're seeing at the CME, the NDPSR actual sales revert back to that 3 cent normal block barrel spread relationship. The big star on this week's report is whey, 43.88. That is a plus 3.5 to the CME weekly average of 140.13. We traded 11 loads on the CME last week. Here on the NDPSR, that volume showed up and then some, coming in at 6.3 million pounds, well above our expected 4.5 million. So the manufacturer was able to move a lot of weight. And of course, in whey, we're always looking at the January 6th NDPSR number of 42.64. The manufacturer sold a lot of weight at a 1.2 cent premium to prior week's NDPSR. So yet another new high for the move in dry whey, 43.88, similar to where the CME settled just today. It'll be interesting if sales continue at this elevated rate at this elevated price. And then lastly, non-fat, 121.18. That's a plus 3.5 to the CME 1 week average of 117.63. 3.5 is higher than expected basis, well over our 2 cent expected basis. We traded 15 loads of non-fat at the CME last week. And again, similar to the cheese complex, that higher basis came at a cost of the ability to move weight. Volume in non-fat this week, 15.6 million pounds, well below our expected 20 million, and a string of 3 weeks of disappointing volume in non-fat. So this is week 3 of 4 for the January pricing cycle. Currently getting a January class 3 of 1520 with January class 4 all the way up at 1937. If you carry current CME equivalents out through the 4-week February pricing cycle, getting February class 3 pretty close, 1540 with February class 4 at 1920. So volatility coming out of the market just a bit. We'll see what they have in store for us in the weeks to come at the CME. Until then, on behalf of Paige and the entire Ever Ag Insights team, I'm Joe. Bye. See you next week.